Hello traders and welcome to another weekly market forecast video. So let's get started with the dollar index. So for the next week ahead, we are expecting to see ideally one more push up in the dollar index and then a reaction to the downside. Perhaps this move will be from the NFP that we have during the week and the jobs data from the US. So the way the market closed on Friday, it has a potential for one more high before this reaction to the downside, and this is what we will need to see during this week. Last week we expected the market from here to give us a reaction, but then on Monday it confirmed that it's going to still make two more highs, which we explained to our members during our market update for the members. You can check us out with the link in the description if you are interested to get updated market updates and trade recommendations, and you can also check up our results so far during this year since we have started. So anyhow, for the dollar index, we want to see ideally one more high before the fall, and this is the bigger move that we will expect to see from the market, which should come with the jobs data most likely. And after this fall, the market can still play around within this area for some more time before any trend of the market. So until then, the market can be also up and down because of more news that we are expecting next week with the FOMC interest rate decision. For the dollar yen, we will also expect to see one more high before the next reaction to the downside, which is similar to the dollar index price action we're expecting. So the market should behave in some sort of this way during the next week ahead. So at the moment, we need to confirm whether one more high will happen, and if we will see weakness at this area near the 154, then the market can give us this reaction to the downside towards the 150 area during the end of the week. For the euro, similarly with the dollar index, we might see one more low before the bounce takes place. So this will be determined probably Monday into Tuesday. So the way the market has declined from the highs from the 25th of September, it looks strong. So with this RSI right here, we can see that this is a weak market. Is not a market which is looking for a big move to the upside as of now. So we might see one more low and then a bounce to the 109, 109, 500 area after this new low. So this will be the expectation for the euro dollar for the next coming week. For the pound dollar, similar to the euro, we might see one more low before the bounce to the upside. We might not, so it really depends on what happens between Monday into Tuesday, like I said before. So this will be the time that ideally you want to be looking what happens in the market, and you should consider how you are trading for the rest of the week. So from our side, what we can see is if we get one more low, then this will be a good opportunity for a bounce to the upside. So this will be what we want to see from the market Monday and Tuesday before at least Thursday before the market can give us this push to the upside, probably because of the NFP or any of the other jobs data that we might see releasing during the week, or even US GDP. So if you want to understand more how this news can affect the market based on the technical aspect and the market psychology, those things we only explain them for our trading community. If you want to become part of it, the link is in the description. And any questions, feel free to send us an email at support@roiforecast.com. For the pound yen, we can see one more push to the upside, potentially to reach the 200 area before we get a reaction to the downside. And this move might be taking place within the first part of the week. Also, we will have the Bank of Japan's interest rate decision, which is expected to remain the same on Thursday, I believe it was. So what we will see is the market trading higher during or before that time, and then a reaction to the downside can happen once we make one more push to the upside. Now keep in mind, this is not a bearish market. As you can see, we are trading higher since the 5th of August, and we are biased to the upside first for this pair before any possible reaction. So the bias overall for this market is to the upside. Last week we expected from here the market to be 50-50 whether it's going to do this and this, or whether it was going to break this range directly, which is what exactly happened here on Wednesday the 23rd of October. So from here we can see more upside towards the 200 area at least, and then we see what happens from there. For the EURUSD, of course, in the bigger picture, since the 5th of August, we are biased to the downside, but shorter term, we are within this corrective sequence and structure since the 2nd of October. So all we want to see from this pair is to eventually trade higher to this Fibonacci extension area, from where we might be expecting to see from here sellers trying to continue the trend to the downside. So if we break higher into this area, it will confirm this sequence from the 2nd of October. And from here, sellers will be looking to gain control back in the market and move the market to the downside. Now for gold we are trading within a bigger weekly time frame target area with extensions. So what we can see based on this move from the 10th of October is the fact that one more high is very likely before a reaction to the downside, but then any dips, we are expecting them to remain ideally supported for more upside towards the 2800 plus area. So buyers should be waiting for a better opportunity for a dip, something like we got here on the 10th of October. This was, as I said before, aggressive buying area for the continuation of this trend to the upside. Here we had another buying area, and here we had another buying area back in August, and of course the ones from May right here. So if we get a pullback, this might provide us with another buying area for gold. So from these levels, there is no risk to reward, nothing valuable to trade. The market gets very risky and overextended. So for short-term traders, is not a good market environment for gold at this stage. For crude oil, we have got the reaction from this Fibonacci extension area as expected, and now the market has entered a corrective bounce to the upside before the next move to the downside. So during the next week, we might be expecting to see a push to the upside with consolidation and another move to the upside before the fall. So the area of interest might be the 74-75 area before the next reaction to the downside, but first this move is not complete yet from 18th of October, which is a low that is looking for an extension of this correction right here, and then the move to the downside. So what we have to see first is how this price action will develop within this bounce, or whether the market will even break these highs one more time before it falls. There are several possibilities, but in the short term, this move is expected first 74-75 area to be reached. For the SPX S&P 500 cash index, we are approaching near the weekly and daily time frame one of the first target areas, which is near the 6K area. But first, right here, we can see the potential of some volatility to be taking place. So that's why we have two scenarios for the index. One of them, the most aggressive view, is one more dip to this Fibonacci extension area, and then from here buyers can take it up to the 6K area, or alternatively this pullback that started on the 17th of October right here. might extend into double corrections lower, and in this case the market can still trade even lower towards the 5,600 area before finding support. So either way, the indices, especially the S&P, should be one to avoid for the next 2 weeks at least until it gets clear, because there are different variations and volatility that can happen ahead, especially with the NFP and then the FOMC after the US elections. So this is not a clear structure at the moment. Of course, it can keep pushing to the upside, which is what buyers were looking to get from these lows from August and September. So if you didn't buy from here and from here, now you shouldn't be chasing the market and wait for the market to give you its decision, what type of reaction we will get. Of course, if you want to be getting regular updates and more detailed analysis, you can join us, our trading community, with the link in the description. So you will always be updated whether we see anything significant in the market or if something is worth looking for a possible trade setup. And concluding our weekly market forecast video with our two ETFs, the 3Qs and GDX. So for the 3Qs, it's pretty much similar with the SPX. However, this time around, we might see also a dip in the market before we go higher as an alternative scenario. The main path of the market remains the same for new all-time highs eventually in the 520 area. But because of potential volatility during this week and the next one ahead, we are cautious with these instruments, and the market can get choppy and sideways to the downside because of the NFP, the US elections, and the FOMC. And also, technically, we are seeing some sort of exhaustion at this area. So buyers bought from here and from here. At the moment, the market is indecisive and is a 50-50 scenario, which is recommended to stay away at this stage. For the gold miners ETF, we are on track to hit our targets around the 45-47 area. This is a pullback in which this week the market should decide whether it's going to do a double correction like that before higher, or whether it's going to start making new highs directly from here. And this is going to be related to the price action of gold as well, because this is the gold miners ETF at the end of the day. So that's it for this weekly market forecast video. So hopefully everybody has got some value from this, and if you are new here, don't forget to subscribe. Leave us a comment, leave us a like, so you can help us out to expand together. At the end of the day, we are doing this for the benefit of all the people out there that are looking to get decent quality of market analysis. Of course, the biggest value we provide is to our private trading community, and soon we will announce much more news and things that we are looking to do. And more content is coming during this midweek. We are looking to be uploading several videos during the week. We are looking to give you guys more information and more educational content, because at the end of the day, unfortunately, in this industry, there are a lot of things against the retail trader, and our mission is to prevent people from getting into these unpleasant situations because of the wrong education and scammers in this industry. So expect more from us soon. Thank you for watching. Enjoy the rest of your weekend, and we will see you in the next video. Take care.